Welcome to the Financial Advisor Success Podcast, where you go behind the scenes with financial planner, speaker, and consultant Michael Kitces to hear stories of how leading financial advisors navigated the inevitable challenges that arise on the path to success, and get insight from leading industry consultants about how to break through to the next level in your advisory business. And now here's your host, Michael Kitces.
Welcome, everyone. Welcome to the 412th episode of the Financial Advisor Success Podcast. My guest on today's podcast is Anjali Jariwala. Anjali is the founder of Fit Advisors, an RIA based in Torrance, California, but working virtually with clients nationwide, that oversees $65 million in assets under management for 45 client households. What's unique about Anjali, though, is how she has tripled her annual revenue from $250,000 to $750,000 during the past 6 years, while only adding a net of 10 client households, going from 35 to 45 in total, by hyper-focusing into her specializations with physicians with complex tax needs and small business owners with $10 to $20 million of revenue, offering a combination of advanced planning and tax and even CFO business planning services, while raising her fees along the way to match the additional value she's now able to provide them. In this episode, we talk in depth about how Anjali shifted her marketing approach over time from paid advertisements, an area that was very successful for her early on, but had become increasingly competitive for her target clients, and instead went to build a blog and a podcast to target her two niches. How Anjali was able to then attract high-quality prospects by centering the content from her blog and her podcast on the issues her top 10 existing clients were already asking her about, including both technical planning issues and the more emotional aspects of money, to demonstrate her both technical acumen and ability to relate to personal experiences with money. And why Anjali then decided to stop blogging and podcasting during the days of the COVID pandemic, as she not only had to support clients going through a period of financial and emotional strain, but had to deal with the stress in her personal life, given that Anjali's own husband worked as a physician navigating COVID exposure with his own patients. And yet Anjali still receives a sufficient flow of prospects today based on those prior blog and content materials that she created and some client referrals from her now existing client base. We also talk about how Anjali grew her revenue primarily by not increasing her client headcount, which only rose from 35 to 45 clients over the past 6 years, but instead by focusing on raising her minimum annual retainer fee from $10,000 to $18,000 per client. Why Anjali's current clients and prospects are largely willing to pay this fee, given the tailored services she offers clients, from her ability as a CPA to offer advanced tax and CFO-style business planning, to even providing feedback to her doctors about how best to negotiate their employment agreements with their hospitals. And how Anjali's decision to decide on the number of clients she wanted to work with and the target revenue goal she had for herself up front, rather than just pursuing unbounded growth, is what allowed her to most effectively value her time and then focus into the clients for whom she could provide the most value at that price point. And be certain to listen to the end, where Anjali shares why she wishes she had invested more hard dollars into marketing sooner, particularly given the time it can take for tactics like podcasting and blogging to bear fruit as with new clients. How Anjali freed up her own time, not by using a TAMP, but instead an outsourced chief investment officer to conduct investment research and queue up potential trades for her to execute, which allowed her to continue to better implement the trades herself to facilitate her customized, very tax-efficient client portfolios. And how Anjali is now approaching the idea of success as she's built a financially thriving practice for herself, in part by focusing on being able to pursue her own passions and maintaining flexibility to meet her professional and personal and family needs. And so with that introduction, I hope you enjoyed this episode of the Financial Advisor Success Podcast with Anjali Jariwala. Welcome, Anjali Jariwala, to the Financial Advisor Success Podcast.
Hi, Michael. Thanks for having me.
I appreciate you joining us, or I should really say rejoining us, because you were actually out for the podcast in the very early years now. One of the first 100 episodes, more than 6 years ago, with what at the time was, I thought, this incredible fast growth trajectory that you had to the business. You were like 3 years in, 35 clients, $250,000+ of recurring planning fees. With like a $10,000 retainer fee. That's a big number for a lot of firms still, but particularly when we're going the first 3 years, and how you had done that, getting like really focused in on physicians and small business owners that you're working with. And so now I know it's been 6 more years the business has 3x'd its revenue. It's over $750,000 run rate now. And the clientele has grown, but only, I'll put like only in air quotes, only to 45 clients. And I find it fascinating because I think for almost any advisor out there, if you said, well, 6 years ago I had 250,000 of revenue and 35 clients, and I've 3x'd the business revenue, everyone would just kind of assume, well, clearly you must have 3x'd the clientele as well. How's it going with 100 clients? But that's not what happened. And this idea to me that there are opportunities to like double and triple the revenue of the business without necessarily doubling or tripling the clientele. I think it's a really interesting phenomenon and kind of growth path that to me has always been out there, but we don't really talk about very much. And so I'm excited to talk about how this business has evolved for you over the past 6 years, that you have gotten to a point where you 3x'd the revenue and only slightly increased the total client headcount. So I think as we get started, I've obviously described a little bit of where the business is now, but just paint the picture for the advisory firm as it exists today, so we just understand what the business is.
Sure. So the business today, as you mentioned, is 45 client households. Those households, I would say 90% are personal financial planning clients. The other 10% is a combination of personal financial planning plus I take on outsourced slash virtual CFO role for that other 10%. My business is still virtual, so we have clients in about 25 states now. I do not meet with anyone in person still, like I did when I was on 6 years ago. And I would say that I've even more so leaned into my niche. So almost every single client is in that kind of physician household with complex tax needs, or small business owners who are kind of in that like 5 to 20 million of revenue range in their business.
Okay. And just curious, because this always comes up, like why those two, and why two and not like one in particular hasn't won out the other over the past 6 years?
Right. It's a good question. So I would say for the physician household kind of small business owner niches, it's honestly like a recreation of my husband and I, to be perfectly
Okay.
honest. You've talked a lot about like ideal client avatar, and for me, a lot of the work that I do in my firm is obviously like number crunching and analysis like a lot of us do, but there's also the other element of it, which is kind of the behavioral finance, the emotion around money, and how best do we connect with our clients to help them make progress, right? So for me, I always felt like I could resonate with people where I really kind of understood where they were at and how best to understand someone unless I'm going through the exact same things that they may be going through. So I would say it wasn't like I intentionally set out to work with physician households because I had my husband's a physician, I have some like understanding, and then I sort of leaned more and more into the niche as the years went on because I realized that I just could really understand and resonate with physician households who are going through a lot of things that my husband and I were going through, especially during COVID, which we can talk about, as well as small business owners. As a small business owner myself, like I understand like a lot of the struggles that we have in terms of growing our business, sustaining our business, and doing so in a way in which we're also maybe raising kids and have a lot of other things on our plate that we're balancing. So I think it was more like those were the types of people that were drawn to me and coming into my client base. And I took that as like a way to not only like build a practice in a very mindful way, but also, align myself with people who were really excited to work with my team and I.
So when you talk about leaning into this as a niche, I guess this what does that mean? I mean, what did you do or change or adapt or like lean in further to make this more focused than you already were in working predominantly with physicians and small business owners?
Right. So what was interesting was when I was on the podcast 6 years ago, I talked a lot about like some of the marketing channels I was using, which a lot of them at the time were advertising on like various physician blog sites. And interestingly enough, after the podcast episode came out, those channels got really flooded. And what happened was originally I was maybe one of like 10 advisors. All of a sudden I became one of like 50 or 100 advisors that are listed on these sites. So naturally, it was a lot harder for people to find me because there's just so many other similar advisors out there. So I decided at that time that it was really important for me to develop my own marketing channels instead of relying on someone else's marketing channel. And
Okay.
that was a wake up call because after, I was 3 years in, I was having pretty good growth. I was happy where things were at. And all of a sudden, everything kind of plateaued. And I was still very much in growth mindset. And I really was struggling with like, I don't understand, what do I do? Like, how do I bring the right clients over? Because I was starting to have prospect calls that just weren't a good fit, or the price point didn't align with some of the people I was talking to. So I decided to create, two different marketing channels at that time. One was I started a podcast, and then I also started a blog post. So every week I would have a piece of content come out, whether it was a podcast episode or another blog post. And what I did with those two channels was I really focused in on the topics that my ideal top 10 clients were going through that my team and I were helping, right? So it was, tax planning for physicians who are practice owners or 1099. I have a lot of physicians who also do real estate. So we did a lot of episodes on like real estate investing, how to get into that, what do you need to look for, right? So I decided to take these channels and put out content where people could really understand what it was that I did, and also to get to know me better. I like to lead with a lot of personal examples when I do my planning, and so I thought it was helpful for people to really get to know me in a different way and through a channel, so that when they decided that they wanted to set up a prospect call with me, they already kind of had an idea of who I was, the type of work I do, and then that conversion process was just so much quicker because they already knew me, right? So I think that was one of the things that I really leaned into, was really like developing a marketing channel that was going to be very catered to who I wanted to serve. And so I didn't need that many prospects to come in because the conversion rate was so high. So it was much more about quality of the people coming in versus quantity of the number of downloads I was getting per podcast episode.
So as you queued this up, I guess, can you just give some more examples? Like, what, just in practice, what kinds of things were you talking about?
Sure. So as you know, I have a tax background. So I have a CPA, a master's in tax, and I spent my first career um, working in tax at PwC. So I led with a lot of my initial episodes regarding tax planning. So I did episodes on how to do tax planning if you're an independent contractor or practice owner. I did year-end tax planning, beginning of the year tax planning. So tax was a big component of a lot of those earlier podcast episodes. I
But these
also
are all in the lens of like for physicians, for small business owners.
Correct. So I actually ended up doing separate ones for each. So I did one that was more physician focused, so like practice owners, independent contractors, and then I did one specifically focused around small business owners. There is overlap, but I think the issues and how structures are set up is different for each of those groups. So I did a separate one on just small business owners and how to do tax planning for that. I also did others on small business owners, like how to read your financials, how to hire the right team, etc. And then I also did a lot of early episodes on more of like the emotional aspects around money, because that's the second thing that I noticed kept coming up in the client base that I was working with, right? Like a lot of my clients are children of immigrants, immigrants themselves, or there's just a lot of money trauma or emotions around money that causes like maybe heightened anxiety or inability for them to really like process and make good financial decisions. So I did a combination of very, very technical episodes because you know me pretty well. I'm a very technical person. But I wanted to weave it in with also things that are not necessarily technical, but do have a component of planning. And that also kind of brings out parts of my personality that people can get to know, right? Like, here's this very technical competent person, but she also like understands me as like another like children of immigrants and what that means in terms of our upbringing and how our parents taught us about money, etc. So I was very diligent and mindful in terms of each episode because like many of us, time is so limited. So I wanted to make sure like every episode I was putting out there was like very impactful and right on point so that it wasn't like a wasted opportunity to connect with someone who was listening.
So if you were framing this up with some differences in the content that the physicians have a bit of a different angle than the small business owners, so you need like the physician version and the small business owner version, does it mean you like, do you literally end up with two podcasts with two blogs? Is it one, there's just content for each and you kind of say in the title who it's for? Like how did you actually manage sort of two different audiences as you began expanding this as a marketing channel?
Yeah, that's a great question. Some episodes were very specific to like a certain niche, right? So I have specific episodes that are like XYZ for physicians versus separate episodes for like small business owners. But I would say a lot of the other content was more evergreen in which it would kind of overlap with both. And, 90% of my client base is still physician households. So that's the main niche that I was and still continue to target. The small business
Okay.
owners have just kind of come to me through word of mouth or their physicians that have businesses. So it was, I kept content for that group, but it wasn't, I would say, like the main focus of like
Okay.
the marketing. The main focus was really kind of this like niche physician household with complex tax needs that I was really like focusing on when I was creating the content.
And so then how did you get it out? Like how do you literally build your blog readership, your podcast audience when you're trying to hone into this like particular segment that you're looking to reach and connect with?
Yeah, it's hard, as anyone knows who's created marketing funnels. So I hired a ghostwriter to help with the blog posts, and then obviously I hired a team to help with editing the podcast episodes, and the ghostwriter was also the one who would summarize each of the podcast episodes so that we can put it on the blog as well. And then for email list, I really just started with like friends, family, and current clients. So it was very, very small to start. Even now, like when I've gone back and kind of looked at where my stats were on in terms of the podcast, like I was probably having like an average of like 1,000 downloads per episode, which may seem like a lot, but anyone who has done a podcast knows it's very small. But that was enough for me, right? So I tried really hard not to focus on like the number of people listening to it because I always kept top of mind that my content is very niche specific. So I don't need a ton of listeners. I just need the right listeners to come in. And so from there, it just kind of expanded. I also was very proactive on making sure to be on other people's podcasts, YouTube channels that were specific to my niche. So a lot of those initial physicians that I advertised on their blog sites, a lot of them already had podcasts. So I reached out to all of them individually and asked, can I come on your podcast? And can you come on my podcast? Right. So I kind of did a lot of this, like, who else has a funnel and a channel that would align with who I'm trying to target and making sure that I can get on their marketing channel so that there's just more viewers and more listeners who I have exposure to.
Interesting. So tell me more about just how you found other podcasts and channels to target, how you like reached out to them to actually get them to do something reciprocal with you.
Sure. What's interesting is that it's a when you're super niche, the community ends up being pretty small. So a lot of the physicians who I either advertised on their website or whatnot were people who had reached out to me in, my prior 9-year career history of having my firm because they have heard about me. They saw me on White Coat Investor, whatever the case was. So I already kind of had a relationship with like 4 or 5 of these individuals. And when I would ask, they were very happy to be on my podcast because they were also growing their listenership. So they wanted someone who is, a financial expert to come on and talk through their stuff. And then they were in the swap was pretty easy. And then afterward, I would always ask them, like, do you think that there's anyone else in the community who I should reach out to that would like to have me on their podcast? Right. So I kind of used my, you know, community that I had already built in terms of like physicians who are also kind of more in this blog kind of marketing type space to see like who else was out there. And it wasn't like, I would say maybe I was on like 10 or 12 different podcasts, which isn't like in the grand scheme of things that many, but that was enough to bring in a lot more listenership because I had all of those individuals on mine as well. Right. So it was really just kind of picking who was the right fit, people I already knew, and then asking them and leveraging their community to see who else I should reach out to.
And I guess someone could you see a bump in, I don't know, listenership, subscribers, downloads to your podcast when after you went on someone else's? I mean, could you see it
I
knocked up
couldn't
that way?
see it, but as you know, like the statistics and the tracking aren't as robust as I would like them to be, at least at the time when I was
Yeah,
doing mine.
yeah. For anybody who does podcasting for business, the data and analytics are painfully limited
It's
compared to what you can
terrible.
do with written content on a blog. Yes.
Exactly. So, and I just didn't have the bandwidth to do like the manual tracking of it on a regular basis. I did have a marketing team, so that was helpful. So they were kind of high level tracking those numbers for me. And luckily, the marketing team that I was using also worked with a lot of those physicians who had podcasts and blogs. So that was another avenue I had because they would bring up people to me as well. They're like, hey, so and so would be a good fit to be on your podcast and you would be a good fit on their podcast. So that kind of just like naturally opened up more doors for me.
So you worked with the marketing team collectively in the niche who works with all the other people who are marketing to the
Exactly.
same niche.
Hence the value of super niching, right?
Yeah, like that's a cool angle. So can I ask, like, who did you work with for marketing, for ghostwriting? Just like, yeah, like who did you work with? How did you find them?
Sophia Berra, who it was she was working with this person. And she's a journalist. So she was like, I think she would be a good fit for you. Like, she would get your voice. She's also like more technical in terms of how she writes. So I think like you should talk to her. Right. So that's how I found her. And then for the marketing firm, I want to say it was another fellow advisor who now I can't think of which one specifically, who also was working with physicians. And we had kind of a little physician advisor group going. So I kind of, I think, put feelers out there and I'm like, is anyone using a marketing firm? If so, can you let me know who? And so one of like that referral came through from that group. And I think that advisor was like, oh, she also works with kind of a lot of these other like physician podcasters and bloggers. So like she kind of already knows the space well. So like see if that's a good fit. And then obviously I do my own diligence to interview them and make sure that they get my voice and like they understand where I'm coming from because my whole premise in terms of when I was doing the podcast and the blog was that it would be a deep dive into the topic that I was discussing. And so, whether you are new to the topic or you feel like you're somewhat of an expert on that topic, you would get something out of that episode because I would start really high level and then I would get really detailed as the episode went on. And so, I really wanted to make sure I'm highlighting both like the technical aspects of how my brain works as well as like taking very complex topics and breaking it down in a way that's more easy to understand for a general audience.
And do you recall just what did it cost from the business end, like just to make these investments into ghostwriter marketing team, stand up podcast to get it going as a marketing channel?
I want to say between podcast editing, ghostwriter, and marketing, it was probably running me like 2,000 to 2,500 a month,
Okay.
which is at that time not an insignificant amount of money for
Yeah.
me. It's definitely the most I was spending outside of like my team on a line item on my
Yeah.
P&L.
Well, I mean, when you were with us originally and making the shift, you were $250,000 of revenue or a little higher. So you talk about 2,000, 2,500 a month. Like it's like 10% of revenue as an
Exactly,
investment
which is a lot.
into marketing. Yeah. Yeah. I mean, that is a very healthy sized, investment. When you look in the grand scheme at just like a lot of businesses and industries, it's not uncommon to see total marketing and sales spend 10 to 15% of revenue, but
Mhm.
not like not usually for most advisors is like a hard dollar line item. It
Right.
jumps
Right.
out pretty sharp at that point. So
Exactly.
how long did it take to get to like 1,000 downloads an episode? How long did it take before you were seeing results with actual prospect opportunities?
So the 1,000 downloads an episode probably took over a year. And then the prospect opportunities took about, I want to say 6 to 8 months. So it definitely was not immediate. But everyone who had done, like, who had a podcast or had done kind of similar marketing channels to me warned me that it wasn't going to be instant, so that I needed to be patient, which I'm not a very patient person. but so but I tried to keep that top of mind when I was kind of building out the podcast and everything, to make sure that I was being reasonable in my expectations.
And this was ultimately so weekly content rotating between blog and podcast.
Correct.
Okay.
Yeah, with the intent that every week something was coming out. And then at the end of the month, my ghostwriter, she would put together the newsletter, which would essentially summarize like all the content for that month and then any media mentions I was in.
Oh, interesting. So like separate monthly email uh was here's our latest podcast episodes, here's our latest blog posts, and here's some media mentions.
Exactly.
And the media mentions like just for the implied credibility, social proof of just kind of lightly bragging on yourself that I was in the media. Like that was the essence of it.
Pretty much. I'm not someone who's good about like talking or bragging about myself. So it's like
Yeah.
a way to be like, look, like there are other reputable sources who have interviewed me or whatnot, and to be able to kind of push out more of that content out there.
Yeah, I remember uh like early on when I had started doing some media PR activity, and I had talked to like a PR consultant, or like a PR and business consultant person who basically said like you're going to do the PR stuff because you're hoping that when your name appears in the media, like people will see it and prospects will call. But the truth is, almost no one calls a trusted financial advisor because of one random appearance in the media.
Right.
But if you tell all your clients about it, they get really excited. They feel really proud that they've picked you, a wonderful expert who was featured in the New York Times, and they end up referring you more and bragging on you if you tell them about the media exposure way more than you get the business from strangers who like see you once in the newspaper,
That's a good point.
even though that's what we all wish would happen. You
Right.
get it out there and the phone starts ringing. So uh so if you had this goal to like to turn this into business, it's just wondering, were there things you did to try to actually turn it into business? Like, I don't know if, was there a call to action in the podcast or the blog?
I did put the call of action both in the podcast and in the blog and in the newsletter, since that
Okay.
was the original intent of those media channels, right? But it was at the end of the episode, and it's been a little bit of time, but I think I said something like, if you think there's someone who'd be a good guest, here's where to reach out to. And if you would like to work with me, please visit me at this website. So the blog also had, or the blog would have that kind of on the, because it's on the website as well. And then I would have that in the newsletter so that there would be a call to action, because as everyone has told me, when it comes to marketing, like, it is good to have that call of action so that there's purpose to what you're doing from a marketing standpoint.
And what was ultimately the structure, I guess, to the podcast, to the blogs? I mean, were you writing long articles, short articles, or these like 5-minute money updates, or these hour-long deep dives? Like what were you actually putting out as content that you found worked for you?
So my podcast episodes were 45 to 60 minutes. I was advised to make them shorter. I just didn't feel like I could get everything I wanted to get covered in that topic in a shorter amount of time. So it definitely aired on the side of it being longer. Obviously, your podcasts are very long and they do really well. So I think that when it's niche and specific, I think it's okay to deviate from whatever the like the rules of thumb
Mhm.
are, right? Because I think you have to make content that's authentic to you and what messaging you want to get out there. The blog posts are also on the longer side compared to what I would say is like a quote unquote traditional blog post. I wanted to make sure that the content that I was putting out there was not like, it doesn't need to be a tax memo, but it was at least detailed enough that I was kind of hitting kind of the main components and the main groups of people in which it would apply and who it would not apply to. So someone reading it actually could get the information they need to make a decision for themselves.
So this, it sounded like, just became the central marketing channel and focus. I don't want to do advertisements on other platforms now. It worked early on, but then other people show up and I can't necessarily control it. So I want my thing that I can control, which was content to show your expertise with this combination of blog and podcast, build a focused audience. I only need 1,000 people following it to be able to grow the client base meaningfully.
Yes, pretty much. That would sum it up.
So I guess help us understand more, like, I mean, what kind of clients showed up?
I think when I came on last time, I think my minimum was like 10,000 a year. And that price point was fine for a little bit of time. But when people started finding me on the podcast and through blogs, because my blog posts would start showing up on physician Facebook groups as well, which was like a nice, pleasant surprise that I wasn't expecting.
Mm.
And I would find out from like my physician clients who are like, "You're on this physician mom group and your blog post is on there." And I was like, "Oh, great. Like, can you tell me can you tell me how it's doing and what people are saying?" And so they'd be like, "Yeah, sure." Just for my own data. But I started to get people right on point, right? Like I would start to get a lot of like physician households coming in with young families. My income range that, at least right now, in which it makes sense for clients to work with me is about like 500,000. So I would say like almost all my clients are in kind of the 500,000 to 2 million income range annually. So I was starting to get more people like in that group and they were right on point. And so then all of a sudden I started to get a lot more people than like my team and I were ready to handle at that rate. So as you know, I take that as an opportunity to increase my fees. So I would say like between like
When demand exceeds supply, clearly
exactly.
you
I
need
mean,
to raise your
it's
fee.
the concept of economics, right? So I decided to just start testing it out. So I think I went to like a 12 minimum a year fee, then I bumped it up to 15,000 a year minimum fee, and then now my price point is at 18,000 a year minimum for kind of more simple households like W2 employees, not too much other complexity. And then for anyone who has a little bit more tax complexity, maybe they have 1099 income or they are a practice owner or something like that, their minimum is at $21,000 a year. So that's kind of where I think I've been at that price point, I want to say, for the last year. So far, that one I think I'm happy with, and I don't anticipate any price adjustments, but I am not wed to my pricing. So if demand goes up again, then I would adjust my prices accordingly. So it gave me an opportunity not only to bring in clients, but I was able to bring in the exact right type of client I wanted to serve. And then I was able to also raise my fees because I was now working with 35 to 45 client households that were all very similar. So it was a lot of just like expertise that my team and I had built. And there's also a lot of just information that we can provide to these clients because we're working with like 44 other people who are pretty much almost identical to the way they are, right? And so I didn't think that that was a big selling point for people until I had multiple clients tell me, because I did do kind of an informal client survey a few years ago, like, what do you like, what don't you like, what do you think is like kind of one of the greatest like value adds that we provide to you when we're doing planning. And so multiple clients have told me that they appreciate the fact that they know that I'm working with X amount of other clients that are very similar to them. And there's a lot of like collective knowledge that we've built that we can share. Obviously not sensitive information, but we can share a lot of these generalities and even
Right.
some specifics with them. And like, hey, so-and-so is also a practice owner and their contract was structured this way and they're getting this much compensation and they're the same
Right.
specialty as you, right? So it really just like allowed us to create a very like niche boutique firm in which we can provide this, you know, really high level of service, but also have this like deep expertise because I was very specific about making sure that fit advisors continue to work with our niche. So I do not deviate outside the niche. I haven't deviated outside the niche for, I would say, like at least the last 4 years, because I realized anyone that I brought on that was kind of outside our normal client base that we usually serve, they took longer to service because we just didn't have that expertise. So it's like an example is like someone with a lot of stock options. Like I don't take those clients on because it just takes me a lot longer to like go back and familiarize myself with how stock options work. And I don't
Right.
have enough clients with stock options that I'm really like giving them the expertise that they need. So I think part of the learning/growing process over the last 6 years is being able to say no, which was not what I was doing my first 3 years, right? I was like, you want to work with me? Great, come on in, right? But it was being much more diligent about saying, like, no, you're not the right fit, but here's someone who could be the right fit, and just being very like mindful on every single slot because I'm only going to have 50 clients total. So I wanted to make sure that every slot that was filled was the exact right
Yeah.
type of client that should be in that seat.
It's one of the things that's fascinating to me about how specializations evolve. There's this mentality out there of if I pick something to specialize in, like I'm obligated to eliminate 100% of my other opportunities that come in. Like I'm required to say no to everybody else. And like, that's not the point. Like say yes to anyone and everyone you want, but you can literally only serve so many clients. And at some point, non-ideal clients are going to take seats on the bus that will take you longer to serve while being willing to pay you less.
Correct.
And you now get the wonderful choice of, well, either you can now let them go, which you're going to feel bad about because most of us don't like letting clients go. So beware taking on clients you're going to have to let go of later if you don't want to let go of them later. Or we don't want to let go of them, so we hire associate advisors to serve them as well and hand them off. And now we have to manage people and deal with all the stuff that goes with managing people while we take our least profitable clients and have them serviced by fixed overhead and like get stuck in these other challenges. Whereas at some point, if you're really focused on a clientele that works, I think like as you've lived, you just get to the point of it's just literally less profitable for me to take clients that don't fit and take up room for the ones that are better fits.
Right. And I think like as I'm doing this longer and also the stage of life I'm at, right? Like I'm in my 40s, I have a child, I'm running a household, I have aging parents. There's so many different things that are taking up my time that my time I'm much more aware of how valuable my time is, and I'm really decisive when it comes to saying yes or no to things based on the time, especially like after COVID where my time was even more limited than it is even right now. I like had to make really hard decisions. Like that's when I had to stop the podcast, I had to stop the blog, I literally had to stop everything that wasn't just essential to serving my clients because I just didn't have the capacity to do so, right? My daughter, we pulled her out of school. My husband is a physician, so he's going into the hospital. He's not able to work from home. So kind of everything fell on me and I just couldn't manage it all. And so
So
after
you
COVID
just flat
passed,
out paused like all marketing for a while in the midst of COVID.
I did. I had to. I did like a final wrap up episode, right? I said, like, I'm going to take a pause just because of what's going on. I still wrote like a few more blog posts, but even then I ended up doing kind of a wrap up. Like, it's just too much. I can't do it. So, like, I'm taking a pause from everything. I let everyone know. We put it out in the newsletter. And I have not resumed any of those channels again, which is interesting. And
Oh,
I haven't had to because I seem to still get enough prospect flow because we really only take on, I want to say like 2 to 4 clients a year. And that's just from like, I'll have anywhere from like 1 to 3 clients drop off any given year because attrition is pretty normal. And so I'm just kind of replacing those people who are dropping off. So for 2 to 4 slots, I get enough traction with the content that I have out there, even though it is a little bit old. It's still kind of more evergreen, which was helpful. And my word of mouth referral network is just much
wow.
stronger now. So most of my prospects and clients who come in are word of mouth from other clients.
So in practice, this was like I don't mean this in a negative way, but like this was like a marketing phase, like literally the business. 3 years building with the with the ads and the original structure, 3 years of doing your own content marketing until COVID happened to derail it. And now 3 more years where there's enough brand and existing clients and word of mouth and maybe some legacy traffic from the content of the past that it sustains your ability to get in a couple of new clients per year at the numbers that you need.
Exactly. Which was not the intent. I mean, my plan was to continue the blog and the podcast indefinitely, but life happens and you have to make adjustments. And I haven't felt a strong need to restart those channels because I get enough of the flow in, and I honestly don't want too many more clients in any given year because I just think that's what we can handle with our current client base and our individual capacities on me and my team members. So it hasn't really there hasn't been really a strong need to restart that, which is kind of interesting.
And just remind me, so what is the income for typical clients at this point? Like just, who's paying 18 plus $1,000 a year fees, $21,000 a year fees?
$500,000 to $2 million of income per year.
Okay.
So I do have an intake form before anyone can book an initial consultation call with me. And those are the types of things I'm looking at is like income, assets, because if someone is coming in and their income is 100,000 a year, which they
It's going to be a little rough.
yeah, and I would tell them that, my price point, these are my price points. And it's interesting because I have had a lot of people like almost balk at that fee. Like, how can you charge that much money? And the people who come who want to talk to me are not usually phased by that price point. Some are, but most aren't because it's people who like they already know they want to work with me, right? I've had clients who are like, or prospects who are like, we already know we want to work with you. Just tell us how much it costs and when we could start, right? So it's not like they're not sensitive to price, but I think that they either have been looking for a while, maybe have had previous experiences that aren't great, or just at a point in their life that they're like, I need to get this done. And I need to just like find someone and throw money at the situation and just like make sure that my financial plan gets done. Because my average client age is also early 40. So these are not early stage people. These are like mid career professionals where they also understand the value of their time. So to them,
Yeah.
it's much more important that they find the person who's the right fit, who's going to take things off their plate, who really understands their situation. So price is a factor, but it's not the primary factor for a lot of these individuals.
Well, and I mean, if you're getting clients that are $1 million+ of income, I mean, 20 grand's a big number, but when you net $1 million, like
Yeah, it's not.
it's 2% of your income. I mean, like
Right.
20 grand as someone who makes $1 million is like a $3,000 planning fee to a household that makes 150.
Exactly. So it's all relative, right?
So, so just curious mechanically, like how do you charge this? I mean, do you literally charge a $21,000 annual fee? Like, do you break it up through the year? Like, or do they still have investment accounts that you bill it from, or do you like run it through their businesses because they're physician practices? Like, just how do you actually execute on a $21,000 fee?
Sure. So in addition to the fee, there's like a one-time onboarding fee that we charge. So that's $3,000. We charge that upfront and it covers the first meeting. And then I usually invoice it monthly. So whether it's personally, if they're kind of W-2, or if it's something that the CPA says will be tax deductible, we invoice it directly to the business and the clients will pay on a monthly basis. And then the fee covers the first 1 million of assets I directly manage. So what I do towards the end of the year is we look at where everyone's investment accounts are. And for clients who are above 1 million assets that I directly manage, I calculate a 0.5% fee on the assets above 1 million. And then that gets added to their essentially base planning retainer fee. And then that new fee will go into effect in the following year. And then if no
And then
adjustments
it's like
apply,
set annually. You're not like resetting the annual
correct.
fee
I just
quarterly.
set it annually. I have like 4 clients who are like AUM only clients. So they're in the traditional, like we bill it quarterly, we pull fees from the account, but everyone else, I just do it on an annual basis. And it just gets rolled into their monthly retainer. So it's not coming out of investment accounts unless they choose to do so. But most of these clients are in wealth accumulation stage. So no one wants assets pulled from their
Right.
accounts. They're like, we'll just pay it out of cash flow.
So I'm fascinated by this, that it's the planning fee covers the first million of assets. I mean, I think there's a lot of advisors to say, like, when you get to a certain level of assets, we'll waive the planning fee. You have like an interesting flip the other way around. Although it's not even that the planning fee, like once you get above a certain planning fee, the investments are waived. If the investment counts are large enough, there's still some investment management fee, but you cover the base first million of investments in a planning fee.
Correct.
Okay.
I know it's a little different from the norm, but it
Well,
works well for me and my client base. So I've been
because they're high
with it.
income and a lot of tax and financial complexity, but they just literally don't necessarily have large portfolios yet. It's not the center of why
I
they're
would
paying you
say like
$20,000.
most of my clients, I do have a lot that are like under that million. But I would say because they're all high income earners and they contribute a lot to the portfolio. So a lot of them are getting into like kind of the 2 to 5 million portfolio range, which is kind of my sweet spot of where I like clients to be. I have some that are higher than the five, right? I have some that are in the 10 or the 10 to 20, but that's definitely not the client base that I am targeting. I'm really targeting this kind of like 1 to 5 million asset household, young working professionals, mid career, early 40s. A lot of them have children. That's not a requirement though. And they're just in a phase of their life where time is very limited, but they have a lot of complexity because of where they are in their life stage. And so that seems to be where I've found I can provide like the most value in terms of who I'm serving.
So now help us understand, like, what do you do for 18 to $21,000 a year
Sure.
in fees? Like, what is the service offering that's wrapped into this?
Yeah. So I would say, I mean, we do all the traditional aspects of financial planning, right? My, value add that there's not that many like advisors who have a CPA tax background. So that's a big component of it, right? Is that we review all the tax returns, we do projections. There's great tax planning projection softwares. I don't really trust any of them, so I build out my own, right? We do quarterly estimates. We're doing a lot of this proactive planning that normally the CPA firms do, but as a lot of us know, the CPA firms are just so overwhelmed with compliance that very few do proactive tax planning. So that's like one large component of our financial planning practice is really that tax piece of it. And I will tell you, like, I look at every return before it's filed, and my team and I find almost something on every single return. And it's not because the CPA did a bad job, it's because they're doing like hundreds of tax returns. So things get missed. We keep detailed tax checklists for every single one of our clients. So when review time comes around, we already like list out all the things we need to be mindful of, right? Like, oh, like they refinance their property. Let's make sure that that's being included. Like maybe they purchased an electronic vehicle. Let's see if they're below the income limits. Some are, most aren't, to be able to get the tax credit, right? So there's things that we're keeping track of throughout the year. And then we're just doing much more proactive tax planning because I have the ability to help identify the tax planning strategies. And then I can bring it to the CPA throughout the year so that we can implement it versus backward looking on like, oh, we should have done that for the last year, but it's too late because the tax year is over. And then there's nuances that I encounter working with physician households. So a lot of it is like contract review. So I do review all the contracts. I always premise it by saying like I'm not an attorney, but I look at contracts all the time. So I can tell you kind of what looks off to me, what the compensation looks like, and what I've seen other contracts have that maybe this one lacks that we should ask for. Because
Contracts meaning like their employment contracts,
correct.
like when
Their
they're cutting
employment
their.
contracts.
Okay.
Yes, mainly their employment contracts, but also like clients who are going to maybe join a medical group and there's a structure in which they're an employee for maybe 2 to 4 years and then they become partner and then what the partnership track looks like and then what compensation and all of those things that change and if they need to do a buy-in. So those are all the things that like I review and as part of the process just for them to be able to like understand because so many physicians will sign off on contracts that they don't understand, that there's things that they don't realize and they leave and then they have to pay money for tail
Right.
and all of these coverages that they didn't realize that they should be looking at, right? Then we do like, I have a lot of clients who really like real estate. So we like any real estate investment that a client is looking at, whether it's like private, like a syndication, or like direct ownership of a property. We look at all of those numbers to see it just, and it's really for me to like give them a second opinion on these investments, right? Especially when we're looking at anything that's going to be like a larger component of their portfolio. I also want to make sure it makes sense from an overall portfolio standpoint. Like, I don't want someone to put like $500,000 into private equity syndication real estate deals, but then they only have like $5,000 invested in the market, right? Like, that's not balanced. So to me, like, I would be concerned about that. And those are the types of things in the conversations that we have. And we're really big on our clients, like kind of bringing us everything that money touches. Like a lot of advisors do this already. We are the same, right? I like anything that you're thinking about, even if you're kind of like, I don't know, but I'm thinking about this. Like, we want to know so we can kind of start like proactively thinking about it and planning for it, so that it makes it a lot easier when you're going to make these big decisions because we've already done some initial legwork and numbers around it. And I think at the end of the day, like a lot of us know that clients stay with us long term because there's comfort in working with an advisor who understands them and gets them, and that's like something that you can put a price on it, but that's like the soft part of our work that really is hard to quantify from a fee standpoint. But if you can figure out that stickiness in which you like draw can get people to come in and they really want to stay with you long term, like that's, I think, where the value add is. And I think that's just a component of how we work with our clients and then the systems and the processes we've created to make sure that we're really able to like handle everything for that client, but also meeting with them at a frequency that they're comfortable with, that they feel like we're there, right? We're not just like checking in 2 times a year. We're checking in with them throughout the year because there's a bunch of things we're doing throughout the year in terms of having those touch points with them that are like relevant, not just like, hey, how are you doing type of a thing.
Is there a standard, I don't know, touch point structure or cadence or goal that you aim for?
Yes. So most of our clients, we schedule out every single client meeting for the entire year. Amy on my team does that. She usually does it in November. So we know on any given month how many clients we're meeting with. And then once we have new clients, we layer them in. And that's just to balance the schedule out. And so when we meet with clients, like I pull up the spreadsheet and I said, okay, we're meeting with you again in like 3 months. And they're like, okay, perfect. I was like,
Is,
just reach out if something comes up, right? But
is
then
quarterly actually a standard cadence for you as a baseline? Like you'll see
no,
you again in 3 months?
no. Standard
Okay.
cadence is probably twice a year. Some
Okay.
of our clients are 3 times a year, and then others may be more depending on what needs that they have. And so some of our clients are much more higher frequency because they just need those extra meetings to be held accountable, but their price point will also be higher to account for more meetings throughout the year.
So it's not just a always fixed, you're like the 18 or $21,000 client. Folks that need more high touch, you do price adjust for them?
Yes, usually in the first year, I keep the fee the same, but my contract is written that if there's like a change in scope or complexity, the fee can get adjusted. So we've had clients that start at a certain price point and then they come to us and they're like, we really need to do monthly meetings. And I said, okay, that's fine, but the price is going to get adjusted because we have you guys set to meet 3 times a year. So going to 12 meetings a year, and they're like, that's fine, just let us know what that is, right? So,
And
um,
what kind of adjust, I mean, just how much do you adjust something like that? Is that like you go from 21 to 23, or is it like you go from 21 to 30?
no, I don't do that large price adjustments. It's usually anywhere from like, I would say like $250 to $500 per month more than where we might currently be at. Because what happens at the monthly, if we have, and we don't have too many clients on monthly, is like they're only really meeting with me 2 to 3 times a year, and then the other meetings will happen with like Amy because they really just need someone to like help them rebalance their 401k, right? Or like they need to like call Fidelity to initiate a rollover. So I've like tried to delegate out the work where if I don't need to be on that meeting, I'm not going to be, and like letting
Okay.
my team handle some of those meetings that are more just like what we call working meetings versus planning meetings.
Okay. So so meetings get scheduled out for the entire year in advance, just so you can smooth and spread the meetings out
Hmm.
and not have them be too clustered. So Are there other things that you focus on in terms of touch points throughout the year?
Yes. So we usually will do touch points every time estimated tax payments are coming up. So clients get a touch point at that point. They get a touch point usually 2 months out before tax, like a tax filing deadline. They get a touch point on starting to upload their documents. So we have like a unique share file link that goes directly into their supporting tax docs folder. So we share that with them. And then we have a list because we keep a list for every client on all the documents they need to gather. So we put that in the email as well. And then there's usually touch points at the beginning of the year when we need clients to update their 401k contribution rates. We like use a mail merge and create a template to calculate everyone's contribution amount if the overall limit has gone up for the year, which it kind of has been over the past few years. So then that blanket email it's a mail merge. So it's an individual email that gets sent out to all the clients first week of January, and then some will reach back out to us if they need help with like how to update that. And then there's another one that goes out later in January for everyone we want to do backdoor Roths for, because we like to do those as early in the year as possible. And then right now we have a touch point going out for like clients who we think are a good fit to do a donor advised fund, because we want to start doing those contributions now as well. And then there's extra ones that we have for like business owners, because their meeting frequency is a little higher because we do quarterly reviews over the financials. And a lot of this kind of sits in like internal checklists that we have, that because I do weekly meetings with my team. So depending on what time of year it is, we'll go through our checklist. And then a lot of the other kind of more individual client touch points will be in Redtail, which like my team manages.
Okay. And just to be clear, like a lot of your touch points are tax oriented given CPA background, but you're not doing tax returns.
Correct.
That's part of the offering for clients.
Correct.
So I guess I got to ask why not? Like you're so into their tax business already.
I think it's because I wore that hat and I know what's involved in order to be up to date on the rules and regulations to prepare a tax return in a manner in which I feel very comfortable and confident in that return. And it's very, in my opinion, as a CPA who's done tax for like 7+ years prior to transitioning to financial planning, I don't have the ability to do all the financial planning plus keep up with the tax rules and regulations and be able to prepare that return in a way in which I would feel comfortable with.
Okay. And the idea of hiring someone into the business to do the returns doesn't help because that just adds people to manage and cost structure.
Honestly, I just have never found the right fit.
Hmm.
It would be a lot easier if I had someone in-house, and I just have not found like the ideal person where it would make sense to bring that in-house. So we're up to we have like 3 or 4 CPAs that we work with, that we refer clients to, and who are very comfortable with like our process and our approach.
So what does the team structure look like to support all the stuff that you do for clients?
So I am still lead advisor on every single client. Amy on my team is like operations manager, paraplanner, kind of like my right-hand person. She's been with me for quite some time. And then Alejandra is our client service associate. She actually was an intern for FIT through the BLX internship program. And then we kind of needed the help, and she was wonderful. So she's been full-time with FIT for 2 years now. And then in addition, I have an outsourced CIO that helps me with trades and more like investment, like portfolio allocation, kind of more of the strategic planning on the investment side.
So are they solely doing investment research, or they actually like implement and do the trading functionality for you?
So they queue up all the trades for me, but I'm the one that reviews and submits.
Okay.
Along with doing research. So if there's clients, I have a lot of clients who are very into like AI emerging technology, so I can ping him and let him know, like, hey, is there any ETFs that kind of focus on these technologies? And he'll do the research and let me know so that I can go back to my client and see if that's something that they want to invest in or not.
And so can I ask, who do you work with as an outsourced CIO?
Yes, I work with Trace Tisler. He might hate that I put his name out there, but he's another, he has an RIA based in Ohio. And he's also a good friend of mine. So we've known each other since the start of our firms because we both started our firms around the same time.
Okay.
And it actually just came up as like a need during COVID because I didn't feel like I had, because I'm on the West Coast, right? So the markets are closed by 1 p.m. my time, and I would be up at like 5 a.m. to start working. But
Mhm.
sometimes I just didn't feel like I had enough time for someone to like to do all the trades I wanted to do, right? And it was like there's so much market volatility happening at the time. I wanted to make sure that I kind of had all my ducks in a row in terms of making sure I was compliant and doing what I needed to do for my clients in terms of investment. So I actually interviewed a number of outsourced CIOs at that point. Some were purely investment focused, some are ones where they like are a quote unquote advisor and you put them on your ADV, and then some are kind of the structure I have now where it's like outsourced and they can queue up all the trades in the system, and I use Orion for trading and portfolio performance. But you as the advisor are the ones that like execute and implement. So that arrangement seemed like that was the best fit because it could be kind of like outsourced contractor, but I'm the one who's submitting everything. And it just worked out best with Trace because him and I, we're in a study group together. So we all already had kind of like similar portfolios. Like we use a lot of Dimensional and Vanguard. So it made it like that seemed like that would be the easiest transition.
So I'm assuming because you're still responsible for the trading, this doesn't show up like a TAMP style charge in basis points. You simply pay like
Monthly
a
retainer.
flat fee or an hourly fee kind of structure.
Correct. I pay him a monthly retainer.
Okay.
Yeah.
Okay. And was that, was that the appeal? Was that the goal? I mean, I have to presume you were looking at TAMPs and other styles of arrangements in evaluating the choices. Like, how did you end out with, monthly retainer outsourced CIO, but I still have to trade as the like sweet spot on the spectrum of the zillion different outsourced
Right.
investment options for advisors?
Yeah, I mean, the problem with the TAMP model, because that was the first model I explored, was that so many of those models, right? Like you have to use like their models. A lot of them don't have good options for small portfolio accounts, which I do have a lot of small client accounts still. So because I was already like 5 years into my business, I mean, I already had like a lot of assets under management. We had a lot of the stuff built out. So I just wasn't comfortable like needing to sell a bunch of stuff and creating tax implications and doing things that, where we'd have to materially change how the portfolios were going to look going forward.
And so now I was saying the fact that it seems like you're built more around the retainer model for business owners and physicians that they pay from their income. Like, what is assets under management add up to at this point, just given the sheer dollars of some of the clients involved?
Yeah. So I'm at 65 million, which
Okay.
is not so huge compared to my revenue. But I think it's because the focus of my firm and our service offering is the comprehensive financial planning, and investments is a piece of it, but investments is not the main driver. So I'm not super focused on like accumulating assets as quickly as possible, right? That's just not the intent because yeah, the fee goes up if there's more assets, but it's such a small incremental adjustment that like the bulk of our revenue is still kind of the base planning fee that we get from clients, and the work that we focus on is really like the planning work with the investments as a component. And so that's where it's like for someone with 750,000 in revenue, I should probably be in the 750, like 75 to a million, like 100 million in AUM range. And I'm not quite there because I still have a number of clients who are paying that higher fee, but their assets just aren't there. And that's another component of physician households, is that I do have physicians who have student loans that are in like the $500,000 to $1 million range. So that debt burden is still pretty significant. So they may not be at a point yet where they can put a lot of weight into a taxable brokerage account. Really, what they're just doing right now is employer 401k accounts, maybe like their backdoor Roth, but we're really focused more on like managing that student loan debt.
Well, it strikes me, if you wanted to relate this back in an AUM context, like 750,000 of revenue and 65 million in assets, like it's just shy of a 1.2% AUM fee equivalent. Obviously your fees would line up differently. Some clients will like be zero because their net worth is negative with student
Right.
loans. So problematic in how it would align for certain clients. But to say, well, we have a deeper tax-centric, physician-centric, additional value-added services with a CPA background, like, yeah, we don't charge 1%. We charge a little bit more than 1% because we're really good at what we do with this specialized clientele that we serve. Like I could easily tell a story about how this fits even in an AUM context, to say that you have an above average premium value proposition, so you charge an above average premium fee on an AUM basis, with the caveat that your fee structure seems to fit better for who you're serving because their complexity is like really not dictated by their portfolio size. It's dictated much more by their practice size and the income they earn from it and the stuff that's attached to it, which is why some of them have big portfolios and some of them have big student loan balances, but they are all in need of the help and willing to pay the fee.
And interestingly enough, it doesn't come up much in prospect calls. And I don't know if that's just a function of the monthly retainer just being more common in our profession now, where people who are looking at advisors are all kind of coming across something similar, unless they're talking to like a Morgan Stanley or whatnot. But it's like no one, like I don't get much pushback on like, oh, why do you charge like that and not on the assets? Like it's not a question that comes up much when I have my calls.
So as you look back on this journey over the past 6 years now, again, I'm fascinated, like the revenue 3x, the client base only slightly increased. What surprised you the most about, I guess, like this stage of the building journey?
I think there's like a few components to it, right? It's definitely a lot harder than I thought it was going to be. When I set out to build Fit, I was really targeting like half a million revenue firm. And then I like far exceeded that, but I don't get the gratification that I thought I would get from it. And I think that's just a component of like it's so hard to build a business, and there's so much of it that you put into and so much that it takes from you, that like the when you get to that kind of goal that you set, like there's a little bit of like, that's amazing that I've built this firm, but there's like, you think about everything that went into it, that is just like it's hard, right? It's just like hard for me sometimes to be like, okay, like it's great, but it's also like what went into it just can be so draining, both emotionally, physically, as well from like a capacity standpoint. And then I'm in this kind of weird stage where I am no longer interested in growing Fit beyond a 50 client household. Maybe we can get close to 1 million in revenue. I don't know. But that's kind of like all I want to do with Fit Advisors, because I've looked at the other options. Like I'm really not interested in bringing on another advisor. And I'm really, because I don't want to be in the business of like managing more people. I really like the client service aspect, and 50 is really all I can handle from my capacity standpoint and the way we service clients. Like I just can't do more than 50. So for me, it's really thinking about like, what do I do next, right? And that's really hard for me, because I am a very, like many of us, I'm a very like goals oriented person, and I've had goals I've set for myself since I was a child. And then what happens when you meet all the goals you've set for yourself, and now it's kind of this like open field of like, you could do anything you want, but that's a very scary place for someone like me to be in because I don't know what that looks like, right? I don't know what the next 5 to 10 years of my career is going to evolve to. Like, of course, I'm going to keep my planning firm, but I will be at a point where, my daughter is going to be older. So she's not going to need as much of my time and I will have capacity. And where am I going to spend that extra time? And that's where I'm in this kind of middle place in which I'm like, I don't really know yet because I am not going to just like continue building a firm in which I have 100 clients, right? I'm going to keep fit kind of where it's at. It's going to continue to naturally grow because clients will accumulate more assets. We'll obviously bring in clients as clients drop off, but I am I am struggling with that right now and I'm someone who's very impatient. So a lot of people are telling me I have to like go through the journey and be patient with the journey, and that's just something that is just it's really hard. So that's where I'm struggling right now, Michael.
Well, it's fascinating to me. I mean, in part, even that at when you're talking about 50 client threshold, like there's still room to grow. Like you can said like maybe we'll get up to 1 million, right? Just 50 clients if every client is on the 18 to 21 fee schedule and then some start accumulating assets over time, like you're on a path to clear 1 million of revenue with no more than 50 clients, just simply like with the model you've got and the services that you're providing.
True.
It's
True. But I think it's like that shift from like growing a firm for the main goal of like bringing in revenue to sustain your household and your lifestyle to more of like what impact am I going to have, whether it's in the profession, whether it's somewhere else. Like now I'm much more looking at like what impact I can have and what my values are, and how do I leverage what I've built to now do something that's going to be more impact value driven. And that's like a interesting space to be in because there are people who are doing that, but there's not so many people doing it where I can draw upon someone else's experience to be like, that's what I want to do next, or that's what I want to do, right? It's like me figuring out internally what it is that kind of brings me joy and drives me, and then how do I take that and do something with it that is going to fulfill me as I'm approaching this kind of like middle age stage of my life.
and I was say, like, do you have a sense as to what it's going to be, or it's really still a big mystery? You're like living down the journey to find out what formulates forth.
I think about the things that I do enjoy, right? Like during COVID, I wrote a children's book, and it's a book that my daughter's the main character in because for me, I really wanted to like have a passion project that was kind of outside of my like very technical financial planning hat, and I was just frustrated that there was like a lack of South Asian representation in children's literature, right? So I like wrote the book and I'm like so happy with it, but I literally don't do anything with it, right? Because I once again don't have like the bandwidth or capacity, and I don't know if like selling books is really what I want to do, but I love the impact and the story and what the book represents, but I'm still struggling with how do I kind of merge this kind of children's author hat that I've worn with like the financial planning hat that I wear and like this outsourced CFO role that I take, and how do I kind of blend all of these personalities and hats that I wear together into something that's cohesive, and then what do I do with that, right? Like where do I go from here? And that's where I just don't know. I'm a very like, because I'm technical, I think very linearly, and I can't in terms of how I'm approaching kind of this part of the journey. And so for me, I think it's just like needing to find ways in which I can tap back into the creative side that I had at one point when I was younger and seeing what comes out of that.
Yeah, I find it a fascinating crossroads that I think particularly in our financial planning world, because we are goal-oriented machines. Right?
Mhm.
It just seems to be how we're wild. We're people who love setting goals and achieving them, and then helping clients set their goals and helping them achieve the goals that they set, because we like setting and achieving goals. I've seen a lot of advisors go go different directions with this. Like a lot of the time it just seems to be, I want a different goal. I want a different goal that's not a money goal. So like I knew one advisor where the goal was, how many days of vacation can I get in with the family and not, and not undermine the business. Like I want the business to be supported and be healthy. And I'm going to make it as efficiently as I possibly can to see how many vacation days I can get in around the business. I knew another where his metric for years was how many hours of PTA volunteerism he did. Like he was PTA dad on top of a very successful financial planning practice, but he got to the point where like the practice gave the money that he needed to put the kids to college and retire, and the what's next was I'm gonna optimize for PTA hours. I've seen others that just say like, all right, my client capacity is blank, 50 clients or 20 clients or 100 clients or whatever it is. Like I'm going to see how valuable I can be to 20 great clients. And I talked to one advisor that was well over $1.5 million of revenue, and it was like 22 clients or
Mm,
something
that's
or
amazing.
something or something like that. Like he was the consigliere confidant to like 20 something business owners who had a whole bunch of complexity, huge amounts of complexity.
Yeah. No, I love that. Yeah, I think for me it's like being able to have a voice in these professions that I'm in which they're very underrepresented, right? For people who look like me and sound like me, right? Whether it's like financial planning, children's literature is even worse, which I was like, oh wow, like that, like that even is more underrepresented. So like those are like, so I'm really trying to focus on like passions, right? Like that's a passion I have. The other passion is like the CFO work takes up a lot of my time, but almost all my no, I would say all my CFO clients are like people of color, and being able to like work with them in terms of like how much I learn and grow and how much value I can provide in spaces in which they may not always have access to is also really rewarding for me. But so is like the planning work when we really do make an impact in clients' lives. I'm someone like, if you took 10 clients away, I would still work the same amount that I work now because it's just kind of my personality type. Because, my
Mhm.
husband has told me this. He's like, well, you seem stressed out all the time. Why don't you just have less clients? And I was like, I will still be stressed out. Like, it's just my personality. I'm still going to do
Yeah,
the work. So I might as well have the clients and
the
have revenue coming
client
in.
work expands to fill the available time. So what was the low point for you on this journey?
I think there were a few. I mean, one was when my prospect flow completely dried up, right? That was like a really hard year financially for my husband and I because we, moved to Los Angeles, we bought a home. So we just had like a lot of bills. So not only was I stressing out about my like kind of plateau in growth, but I also had like real financial stressors personally. And then again, COVID. COVID was very, very rough. I was rough for a lot of us. Physician households, there was like another element to it where, and this was something where, I was going through very similar things that a lot of my clients were going through, where we were like on phone calls and my client is asking me like, is your husband moving out? Are you moving out? Like, what are you guys doing around this? And I would, and I ended up, my daughter and I went and lived with my parents for a while because my husband was so worried about exposure at the hospital. And this was so early, like we didn't know enough information that he's like, I'm just going to need you to go. And I was like, for how long? And he's like, I don't know, indefinitely. And I had like 6 or 7 other clients that were all doing the exact same thing. Right. So it was like, that was really tough. And to like have to like, I really liked doing my podcast and I really loved that part of it. So just to have to give up so much was really tough as well. And just like, it was just survival mode. I mean, so many of us were just in survival mode at that time. So that was just like a really hard period. And it was not only hard from like personally, but it was also like we were taking on a lot of the emotions of our clients who were also going through really hard
Yep.
times, right? I had a few client businesses that got shut down during COVID because of the mandate. So like that on top of like me trying to manage my own personal situations, like I'm meeting with these clients like every day because they're like, what are we going to do? Like we shut down, right? So like helping them work through it, trying to get them PPP funding, like that was really rough. And then, ever since then, it's not like things are low points, but it's like, there are periods that are just hard. Like when there's just, I'm still like a solo advisor in a certain respect. So like I still have to do like all the compliance and everything that comes with it. And I've outsourced a lot of what I could outsource because that was part of where I decided a few months ago to spend, or a few years ago, is to just spend money to free up some more of my time so I can focus on what I really want to do. But there are just certain things I can't outsource, right? So sometimes the day to day of that will get to me, but I try to take a step back and try to like think, like reflect on like what I have been able to build, and like the fact that I do have a lot of flexibility, because my biggest thing right now is being able to like have the flexibility to be present in my daughter's life. Like I want to be able to pick her up from school every day. I want to make sure that if there's opportunities to volunteer at school, that I have the flexibility to do so. So like, there's like definite perks that I really enjoy, like having my own firm, but there is a lot of just like either low points or just like struggles or things that are just like really frustrating that like will constantly come up that you just kind of have to deal with as a small business owner.
So, is there something that you know now that you wish that you had known 6 years ago as you were going through the first of these like transition phases for the business?
I wish I invested in marketing like right off the bat, to be
Mm.
perfectly honest. I wish, because I already had kind of my niche formulated when I started my firm, and I wish I just wasn't so cheap about it at that time. And I wish I just started some sort of marketing channel like really early on.
But I thought
That's
you were literally like spending on
But not until I was
ads
like,
and
yeah, but
and
the
such.
advertising, maybe I was spending like $2,000 a year, right? They were very like, it was low cost
Okay.
stuff that I was doing. I wasn't when, this, and then obviously I went to like spending $2,000 a month, which, at the time I was like, I wish I did it sooner, but there's also a piece of it where it's like really hard to spend that much money when you only have like 8 clients and you're not
Well,
really bringing in much revenue, right?
I was going to ask, is there a part of this that that the business just had to grow to a certain point where spending on marketing that way would math appropriately?
Probably, but I'm like a grass is always greener on the other side type of person. So I was like, I wish I did that a year earlier, right? And some of it is just like the growing pains of it, right? Like I think
Yeah.
I needed to have experienced that plateau to really push me to
See.
really create the marketing channel and to do it not in like this
Okay.
ad hoc way, but in a very diligent way to get the results that I want. Marketing is not something, even to this day, that comes naturally to me. It's why I still pay someone to do marketing, because it's just like it just, my brain doesn't work that way, and it's just not something that I
Mm.
particularly like. So I need someone to tell me what to do, type of a thing, and that really helped get me to a place to where I'm like, okay, I can do this, right? Because that's the thing, is like you have to create the marketing channel which you can sustain. Because if it's too hard or it just doesn't feel right, it's not going to be one that you're going to keep up with, and then it doesn't really work at the end of the day, because consistency is so important when it comes to that.
So, any other advice you would give younger, newer advisors coming into the profession and trying to start building their careers today?
Um, yeah, I mean, I think there's so many great things I've learned over the years. I think like what I appreciate now is that there's actually firms like my firm and a lot of other great firms where you can now go work in those firms, right? When I was starting off, there weren't very many firms built like mine. So a lot of us felt like the only option was to start a firm, which is okay too. But starting a firm is really, really hard, and growing it is can be even harder. So like finding the right fit is so important. And I would really like, for anyone who's like thinking about starting their own firm or kind of in the early stages, I feel like it's really helpful to like try as often as you possibly can to focus working on the business versus in the business. You have more capacity early on. It's a lot harder when you're like 45 plus clients in. But to just like really be thinking about like, what's the work I like to do? What's the work I don't like to do? Which are my clients that I really like working with? Who do I not like working with? So that every person who comes in the door after that point, or every decision you have to make after that point, you're much more mindful of. So you're building the firm you really want versus just trying to build something ad hoc that you need to fix later on.
And how do you answer all the folks that just get, I don't know, stuck, get fearful on, but I'm afraid of all the clients I'm gonna lose early on if I pick like one thing to focus on out of the gate?
My whole career has been very technically focused on a niche. So even when I was at PwC, like I did state and local income tax. So like I'm wired to pick something and get really, really, really good at it and focus on that. And that's not everyone's cup of tea, right? That's why I think it's important for you to like really understand like who you are, who you want to serve, and the work you like to do. And even if you're more general, there's still going to be people who are going to come across your plate that are still not going to be a good fit. And it's okay to say no to them because that person you say no to now, you're going to be able to fill them with someone else later who's going to be the right fit. And the people who are not a right fit are really emotionally draining. And that is coming from personal experience. Those people were really emotionally draining for me. Those are the people that kept me up at night. Those are the people that I would have anxiety before I was going to meet with them. And then I finally like got to a point where I'm like, why am I doing this to myself? Right. And then letting go of those clients, right? I'm like, is great in the aftermath of it, but it's really hard to let go of someone, even if they're not a right fit, because it's a relationship that's there and it's hard to tell people like I can't work with you anymore. So I think if you can exhibit some constraint in the beginning, even though it's really hard, the payoff later on is just significantly more than the small amount of revenue you're going to get from that client in the interim. So it's really like, and especially if you're building something that's more of a boutique firm where you're not going to have like 100 clients with multiple advisors and you are going to stick to like a smaller firm, you have to be really mindful of how many clients you think you can serve and how many slots you have and how many people you want in those slots, right? And I always did the math backwards. Like I was always like, I'm going to have no more than 50 clients and I want $500,000 of revenue. So each client has to pay $10,000. That's how I came up with that fee to start. And then it's adjusted along the way. And that's how I'm at 45 clients with 750 of revenue, right? But I think it's helpful to also understand what you need financially from the business, because all of our time is really valuable. And the one thing I consistently see, and it's not just with advisors, it's with all of my business owners, is we really undervalue our service and our time. And we shouldn't, right? Like we should be really cognizant about our time and how much our time is worth, and then pricing our fees appropriately. And then from there, really understanding who's the clients that we really want to serve, that's going to fulfill us, and that who we're going to provide the most value to.
So as we wrap up, this is a podcast about success. And just one of the long-standing themes is how the word success means different things to different people, and sometimes changes for us as we go through our career and the business evolves. And so as someone who's now built it's like objectively very financially successful business, almost $20,000 revenue per client is a amazing number. So the business is in a wonderful place. How do you define success for yourself at this point?
For me, success is having the ability to say no now to things I do not want to do, and to have full control over my schedule so that I can have the flexibility to work when I need to work, but also have the time for myself and have the time for my family.
I love it. I love it. So there's been a shift. It feels like there's been a shift from the things we say yes to get to like the revenue and financial goals, to like the autonomy over who we work with and what we do with our time, once you feel like the dollars are getting to the place that you need to feel good financially, and then other things become the priority.
Exactly. Yeah. It's a really nice place for me to be in which I'm not overly focused about how many dollars are coming into the firm, right? Because the dollars are coming in, and
Yep.
we financially more or less can do what we need to and like to do within our family. So having that stability, because financial stability is so important for me just with how I grew up, it's like really nice to be in a space in which I can say no.
I love it. I love it. Well, thank you so much, Anjali, for joining us on the Financial Advisor Success Podcast.
Thank you for having me.
Thank you.
Want even more ideas, tools, and resources on how to break through to the next level of success as a financial advisor? Check out the leading financial planning industry blog, Nerd's Eye View, at www.kitsis.com, where Michael covers the latest practice management trends and financial planning strategies. And by joining the members section, you can earn IMCA and CFP continuing education credits, along with exclusive member content. Get it all now at www.kitsis.com.